I think let's just dive straight in. So the pandemic insurance product, I originally came upon you and this product when reading an article in Wired magazine. So I understand this product was quite like it's not been a recent endeavor. It has a history. Can you just give us a bit of a background about how this product came to be?
No, sure. No, indeed, it is for us. It's really a story of a couple of years back, and quite originally we had approached pandemic risk from an internal risk management point of view. So, as one of the all of the peak risk scenarios that a reinsurance company would look at, right? I mean, you have the earthquake scenarios, you have the windstorm scenarios, of course, you have the pandemic risk scenarios, and while focused, I guess, in the awareness of risk management more on the life insurance or life reinsurance side, I mean, it was clear there's a significant insurance gap, right? Also, not only on the life insurance side, but also broader. And I mean, put it that way, I mean, we always feel it's the role of the reinsurance companies as well to push the frontiers of insurability a bit. And so maybe we thought these techniques which we had developed over time for our own internal risk management and to manage our own exposure. So maybe that can be applied as well to develop a niche market segment. And all of that kind of pre-work and achieved milestones ultimately led to the foundation of a dedicated business unit, Epidemic Risk Solutions, back in 2017. And I guess the unusual thing is that we were kind of started with a broad mandate. It's a global mandate from the beginning, and the mandate across all sectors. So we do life and non-life and public sector insurance, capital market instruments. And that is really due to the nature of how we feel that epidemic and pandemic risk needs to be managed. And maybe if you like, I can give you some examples on where we felt like scenarios where it is useful for the African continent, for example. Because clearly it's not only about global events, right? There are many regional or local events. So product examples of what we offer are loss of gross profits for the hospitality industry. And you have that in many African countries being quite dependent on that. It might be real estate investment trusts, right, who suffer the losses now. But also it might be delay in startup insurance for construction projects. So if you want to pinpoint examples to it, if you think of infrastructure projects, right, connecting Rwanda with Tanzania, all of that next to DRC with frequent Ebola outbreaks. If you think of a lot of business interruption, economic damage also being done in Western Africa, right? So if you had a project there, a business operation there, that might be something you could consider also protecting. And maybe one last comment, because on your question for the historic development. I mean, maybe worthwhile to say that we were not alone in that as well, right? We were not the only one who had endeavored that making economies and countries more resilient here would be a worthwhile endeavor. So for example, developmental banks like the World Bank have been very active as well in promoting such solutions. The big challenge, obviously, for developing such covers, developing such a niche market segment, is the accumulation risk.
Right. And so that sort of segues nicely into the next question. How did you, what was described as some financial alchemy, how did you make this uninsurable event insurable?
Now, I guess if you hear people talking about why is pandemic risk not insurable, and obviously that's often discussed these days, I guess I would differentiate two dimensions. On the one hand side, you have the pricing aspect, the underwriting, the risk expertise aspect. That is something where we feel, well, of course, it's not the easiest risk factor. You need to build up that expertise, but that's not making it uninsurable. Now, if you look at it in terms of how the events originate, right? If you look at the disease outbreak news of the World Health Organization, like you have 200 disease outbreak news reported by the World Health Organization every year. 5 of them maybe being completely new diseases jumping over from animal population to human population. So if you like, the risk as such is like a pyramid, right? You have this constant frequency of small and tiny events ongoing. Some of them become bigger. That's the Ebola, Zika, MERS, SARS types of event you read about every other year. And then, of course, you have the occasional global pandemic.
Yeah.
So 2009, the swine flu, and now obviously a non-influenza pandemic, the COVID-19. But this can be managed from that point of view because you have this event base. So it's not only modeling the isolated tail event. Now, there are more challenges to underwriting and understanding that risk. So it requires a bit of wording and underwriting expertise. How can you make sure what is a unique event as you have a long timeline of events, right? It's not like an earthquake happening in a second. Like tragically, we all learn now, right? It can take months and maybe even longer. But all these things can be addressed and can be developed. By now, there are even third-party vendor models available to the market. Mm-hmm. Not for the economic losses yet, to be precise, more like on the actual event fatalities. But these are the things which are developed. So the second, and I would guess the more fundamental hurdle for the insurability of epidemic and pandemic risk, that is really the accumulation risk. So what is behind is that unlike earthquakes, you can't say this was a small one, this was a large one in the moment it's happening, but each of the small epidemic outbreaks could develop into the next global pandemic. Naturally, most of them will not, and some of them are really less likely to do so than others. But that is where if you like, the business model of insurance really breaks down fundamentally, because this concept of diversification, diversifying the Asian event with the African event, this doesn't work in that moment anymore. So what could you do to solve that if you want to make that insurable? Well, ultimately, you can only put the risk on many more shoulders. And that is also more shoulders, I would guess, from the insurance industry, but also beyond that, like that maybe capital markets and others. And that is a worthwhile development exercise, because we strongly believe that as an investment proposition, as an investment product, also investing into pandemic risk is a very promising proposition. Still it is. I say that, of course, you see the reaction on capital markets, but if you compare the risk profile to comparable credit risk investments, it's really paying a higher return. So there's good reasons to do so. Now, and what we feel that our role is as a global reinsurance company, we feel we are very naturally positioned in the value chain to develop both these markets, right? To develop both the epidemic risk insurance and the pandemic investment market, and to connect these two. And that ultimately is what we believe can really help to develop a risk adequate market. Not to be mistaken, it's a niche market, right? In all these kind of global pandemic discussions we have right now on government risk pooling, on how much can the insurance industry bear at all. Clearly, if the goal is to bear all economic losses, I mean, for that you need governments. I mean, many associations, the American Insurance Association, for example, was very prominently quoted. If all economic losses, business interruption losses would have been insured, of course, the capital base of the whole industry would have been depleted within weeks. But we believe it is very worthwhile, nevertheless, to develop these niche market segments for many reasons. It helps for preparedness, it helps for every risk which can be borne, also for smaller events. And that is something what we're really trying to do. And as typical in developing of new niche markets, and similar to, I don't know, the early days of cyber insurance or other segments, right? It's of course a small start. Often as a reinsurance company, we also go direct to develop the expertise. And then over time, of course, we support and partner up with more and more primary insurers to also bring such products to the market.
Can you explain your working with Metabiota and companies like these in just bringing this product to, or helping with the underwriting of this product?
I mean, it's really about the market development as well, right? Of course, you need to have the brokers who are the trusted risk managers and the trusted partners of many corporates. So that is where you also need to go and develop the market, educate the market. And for that, companies for risk analytics, such as Metabiota, are important. And there are other modeling companies, other data providers as well. But they can really help to quantify the risk for a risk manager, for corporate. And obviously also not every company would build up so much in-house expertise like Munich Re has done. So it's also really to provide the tools to develop a market that is similar to how the World Bank was also choosing AAR as the risk model, right? So to really make these tools available for market development.
And if I understand correctly, was this sold through Marsh, the brokerage? And what was that? Was it Pandemic X, or what was the product initially sold as?
Now, obviously, as a global company and approaching many markets, we have different sales corporations. Okay. And naturally, also we have worked with Marsh, and Marsh did promote this product under this particular name, Passenger RX. But naturally, we are also working with other brokers, and other brokers use different names.
And then in originally setting up this product, or this insurance solution, did you envision the extent of how much, or the extent of such a global pandemic as we're currently experiencing?
Now, let's put it that way. We didn't need to fundamentally revise any models. They were fairly stable. So a coronavirus pandemic as such was clearly a model scenario. Coronavirus pandemics often have a high contribution to the expected loss. You can also see that from being included in the pandemic emergency facility of the World Bank, where in that tranche of that transaction, which covered the global pandemics, coronavirus was included, and that cover did also pay out for this pandemic. Nevertheless, of course, you're always learning as a new epidemic event and pandemic event unfolds, right? So what was truly new in this case was this massive scale of lockdowns and all the countries reacting to it.
Okay. Just so I can explain the parametric structure of the pandemic insurance.
Now, there's different ways of structuring such products. The typical product would be an indemnity-based product, which really reimburses and indemnifies a loss. Yeah. Now, what you do face, though, is that epidemic and pandemic risk has a certain inherent complexity. What is the seasonal disease, the seasonal or endemic event, like yellow fever in many countries, right, which is constantly present? Mm. And where do you start calling an event an epidemic? Because it's either a new one or a particularly severe one. And for that one, you could use, or we typically use, parametric event definitions, if you like, which is just a way of objectively describing the event. And there are different ways of doing that. You could just simply do it by the scale of the event. And naturally, the larger an event, the more likely it lasts longer and the more drastic the economic impact. So that is one way of structuring a product, which is particularly relevant if you want to also cover local scenarios or national scenarios. If you go for the global events, for the international event, then of course you can also use tools like the so-called pandemic health emergency of international concern being declared by the World Health Organization, or maybe combined with the lockdown of government, if you think that is the kind of loss scenario which you want to ensure.
Okay. And how was the take-up of this product initially when you first brought it to market?
Now, from our approach, it's really to be differentiated by segment. So on the life insurance side, for example, or life reinsurance side, from our perspective, because on that standard life insurance policy, of course, the risk is covered. But on the life reinsurance side, that was say, an area where we didn't need to educate the market a lot, because that is, even by regulators in many countries and many regions, that is prescribed. And we obviously had transactions where we work together with the World Bank, and you also see initiatives like African Risk Capacity, really focusing on the financing of the outbreak itself.
Yeah.
Clearly, the highest hurdle for market development we have seen on the non-life side, on the business interruption side. And there, I would guess, as you talk to companies, as you talk to risk managers, I mean, the generic existence of the risk exposure, I think, was understood.
Yeah.
Maybe not always the scale and magnitude of it, but as often in newly developing market segments, that does not necessarily always translate into an immediate product purchase decision as you kind of make yourself familiar with the risk. And that now, of course, tragically has become much more understood, and how big the exposure truly was.
And do you think that the product purchase of this insurance or pandemic insurance will increase as people are now aware of the inherent risks of these global pandemics?
No, absolutely. That is what we are seeing in the year 2020. I mean, now we have a massively increased level of demand. Now, of course, a lot of companies are still in the process of managing the current crisis, right? And there clearly is a limit. Like as an insurance company, we cannot insure the burning house anymore. So the current event we cannot insure at this point in time. So it's really for the next event where we can prepare better. We can potentially enable captives to still also find solutions for the current event, but I guess the market will now from here clearly develop over time.
Right.
And that will take a while, but I could also foresee that certain, say lending banks, developmental banks, really want to see such covers in place in the future if they do finance certain projects.
Okay. And what were the key takeaways for Munich Re from this pandemic? Are you going to go back and do slight tweaks on your product, or?
Now, that is something which you should always do in each and every product. I think not only for epidemic risk. Like as always, as you learn more about your risk, as you also simply develop a broader variety of products, you always evolve and incorporate. I think that the big takeaways for us, particularly as a business unit, beyond all the personal living through the event that you insure, right, and all these consequences there. But it's really like, for us, we needed to standardize a lot more of our processes, because we needed to move away from a tailor-made approach to a much more standardized approach. But now it's really about developing the market, like partnering up with many others to do our share to, well, I guess, prepare better for the next events. And evolve there. And simultaneously, of course, there's the challenge that we cannot cover all economic losses, right? There's the political dimension of course right now, and the broad economic suffering for which you do need government support. Yeah. But beyond that, I think we try to do our share.